Weakness persists in the market, a 121-point cut for the Sensex. In fact, a fresh 52-week low for both the Sensex as well as the Nifty. And the Nifty is now scarily close to that 7150 mark, 7175 on last count. But let's focus on earnings. Considering it's such a heavy, important earnings day, you've got SBI, Tata Motors, Coal India, long list of numbers. And then, of course, some earnings reactions as well coming by. Engineers India being one such case in point. And you'd have to say there's pressure this quarter for EIL. Considering the sales have come in lower, there's been pressure on the margins. The EBITDA as well has seen a downtick of about almost 16%. So let's start with Mr. Sanjay Gupta, CMD at EIL, and try and figure out what went wrong and where is the pressure really coming in from. Mr. Gupta, good morning. Now, analysts were building in a strong quarter with significant margin expansion, but the company has not come through on either the top line or the bottom line growth. What, to your mind, has gone wrong? Where is the pressure coming from?
In the last, in fact, to be very honest and frank with you, the last couple of years themselves have been a tremendous pressure for a consultancy organization such as ours. As you would recognize, a consultancy organization is directly dependent upon the investment climate in the country. And as luck would have it, most of the mega ticket investments which were slated to come up online, particularly in the oil and gas sector where we typically operate, somehow or the other have not taken off. Most of the projects have been in the conceptualization stages, and I think we as EIL themselves have been actually working on a number of projects, but most of them are yet to take off as investment. It is natural that these things were bound to show up. As you might be aware, there are two typical segments in which we work. One is, of course, the consultancy segment, and the last couple of years we had emerged as a major EPC player as well. But as luck would have it, in the last couple of years, there is nothing which has come up in the EPC segment, which was up for us for grabs, so to say. So obviously that is something which has reflected on the turnover and naturally does reflect on the margins, etc. But if you look at the numbers between last year and now, I think we are more or less flat. It's neither gone up nor gone down, but yes, the margins have been under pressure because whatever little is up for sale is also under tremendous pressure and competition from all quarters. It is hurting the margins in a way.
Gupta, if I look at the commentary which is coming from an IOC, HPCL, BPCL, all of them are indicating that they've got big expansion plans. They are committed to expand and renovate the existing refineries. So how soon do you think the comments from oil refinery companies will actually translate into real action and economic reality for EIL?
I think some of it has already started. I think the quality upgradation program, which has already been lined out, and we have a very clear-cut focused timelines which have been drawn by the government also for ourselves. I think that is an investment area which is picking up, bound to happen shortly. To be honest with you, some conceptual work on that has already been initiated, and we are looking into the various kind of strategies and programs as to how these could be taken up. We believe that investment to the tune of 20 to 30,000 crores should be up for grabs in the next 6 to 8 months. And we do hope that next year these projects definitely will materialize. The other mega project, which is, of course, on the anvil, is the HPCL expansion at Vizag. And we are already vying for it. We are already doing the pre-project activities for that. And there is a good chance that we might initiate the implementation of that also shortly. These are the two big things which are immediately likely to happen in the domestic industry. Apart from that, there is another major call which, in line with the government of India's thinking, with regard to upgradation of the refineries from the efficiency point of view. So I think all the refineries which we have, be it IOCL, HPCL or BPCL, some of them are already under their quality upgradation program. We have already completed the work for BPCL. HPCL, the one at Kochi is under progress, and I think for a number of projects of IOCL and HPCL also, apart from the expansions which are lined up, that's another program which might happen. They may not be very big ticket investments, but they will also help in that mid-sector domain consultancy work for us. And of course, since we've had the privilege of building these refineries, we hold a good chance to try and see as to how best we can take it forward from there.
If you're optimistic about a few things, how optimistic are you about numbers? I know you mentioned margins are under pressure, but the kind of numbers that you've posted for Q3 and possibly will post for FY16, what quantum of growth can you envisage for FY17?
It is too early to predict because unless a big project like a West Coast refinery, which has recently been announced, to give you a big ticket number out there, but I think we should be in the band of where we are as of now, and I think safely one could look at 5 to 10% increment on that. Because most of the consultancy work which does happen, it has a certain cycle time. These projects, in our opinion, will materialize in the next 4 to 6 months, and then there is a certain cycle time before the revenues will start coming in. So we do expect that from where we are today in the domestic industry and the domestic sector, so to say, from the oil and gas, and there will be a fillip to this based on these few programs which I've shared with you. And based on that, one can definitely expect at least a minimum of 10% increment.
Great. Good having you, sir. Thank you so much for taking the time out. We hope Q4 and FY17 are much better years for Engineers India. Thanks so much for joining in today.
Thank you very much.
By the way, there is pain on a lot of broader market stocks as we just wait for NBCC to come in. Remember, that one had a bit of a painful quarter as well. The margins came off and the stock really went down in trade yesterday. But point out some specific names. Alstom T&D down 6.5, almost trading at fresh lows. Jubilant Foodworks is at 1120.